May I start again? So good morning. My name is Waranat. I am manager. I would like to welcome you to SPRC Digital Roadshow for the third quarter 2025 performance. Before we begin, I would like to introduce SPRC management team who are present in the meeting with me today. First, คุณนุสรา สมเกียรติ วีระ Vice President Finance and Accounting.
สวัสดีค่ะ Good morning.
Second, คุณณรงค์ฤทธิ์ ชัยราช Vice President Strategy Policy and Development.
สวัสดีครับ
Third, คุณอัศวิน เผ่าทองไทย Commercial Advisor.
สวัสดีครับ
And คุณยันยง อังกมเกลียว Planning Manager. Today's meeting will begin with the key strategy and highlight by คุณณรงค์ฤทธิ์ and followed by performance analysis by คุณอัศวิน and คุณนุสรา and then คุณณรงค์ฤทธิ์ will present for the looking ahead before the Q&A sessions. At this time, I will now turn the sessions over to คุณณรงค์ฤทธิ์ Please go ahead ค่ะ
Thank you very much คุณ Warana. Good morning investors. Before we begin the session, on behalf of SPRC, I would like to take a moment to express our deepest condolences on the passing of Her Majesty Queen Sirikit, the Queen Mother. Her lifelong dedication to the Thai people, as well as her enduring legacy of compassion and services, will forever be remembered. We extend our heartfelt sympathies to the royal family and to the people of Thailand during this time of mourning. Okay, we move to the next slide. So today, we will be talking about the performance of SPRC as the enterprise. I will start with the first one on this slide. Please allow me now to take you through our enterprise performance enhancement initiatives, which highlight the key improvements we are driving in our refinery business and commercial business. I will start with our refinery part. At SPRC, operational excellence remains the core of our strategy. For the upcoming turnaround next year, we successfully prepared the T&I Superior Initiative, which will deliver best-in-class CDU downtime crude distillation unit, reducing turnaround from 30 days to just 24 days. This initiative aims to derive the best downtime in our history, reflecting our commitment to efficiency and maximize benefit. We will also leverage my apologies. We will also leverage superior technology and digitalized optimization to enhance operational robustness, providing strong reliability and maximize productivity. We are not only focused on long-term successes. Our initiative also provides short-term win by our value creation project, increasing light crude processing capacity. This could uplift our long-term run rate margin growth after the turnaround is completed. On the infrastructure side, we are ready for the SPM replacement project, single point mooring, ensuring safer and more reliable operations. This upgrade meets world-class specifications and minimizes environmental risks in the future. Additionally, we ensure global quality standards achievement together with delivering a smooth and in-time process through strong collaboration with our parent company and partners. These efforts reinforce our ability to deliver consistent, safe, and efficient operations. With our current level of readiness, we are assured of executing the turnaround activities effectively. In addition, we addressed investor concerns over turnaround OPEX and have revisited the accounting practices, leading to a reduced cost allocation to the OPEX category going forward. Next slide, please. Turning to our commercial business, this acquisition underscores our strategic commitment to smart investments. The transaction delivered a compelling value proposition with a look-back internal rate of return IRR double-digit. Also, the synergy benefits from supply chain integration will enhance business margins and optimize costs, providing a solid foundation for long-term performance. Following the acquisition, we delivered margin gains by increasing domestic sales and driving significant OPEX savings, bringing costs down to below $1 per barrel through efficiency improvements and rigorous cost optimization. Beyond the inherent volatility of pure refining margins, SPRC benefits from a resilient enterprise margin, strengthened by sustainable contributions from our commercial business. Looking ahead, our strategic focus is on driving sustainable growth and enhancing margins. We aim to scale up retail volumes through same-store sales growth, expansion of retail stations, and the development of a robust retail ecosystem. These efforts are designed to strengthen our retail footprint and improve profitability. In parallel, we are prioritizing cost efficiency with a clear objective to minimize and stabilize costs for long-term resilience. This dual approach, growing revenue while controlling expenses, reinforces our commitment to maximize enterprise margin by achieving the lowest cost base and highest margin potential. Beyond retail expansion, we will continue to grow our term contract portfolio to secure sales volumes and mitigate the impact of price volatility. Additionally, we are actively exploring regional opportunities across ASEAN to diversify sales channels and strengthen our market presence. These initiatives will not only accelerate cash flow generation, but also position SPRC as a more resilient and competitive player in the evolving energy landscape. Moving to the next slide, I would like to report that in the first month of 9 months of 2025, SPRC delivered the adjusted net profit at $23 million, reflecting the strength of our core operations. The operational performance was supported by an enterprise margin of $6.28 per barrel, a blip bottom line improvement program contribution of 73 cents per barrel, and a total enterprise sales volume of 52 million barrels, slightly rose from last year after we combined a partnership with Pure Thai. Through the integration of refinery and commercial operations, you can see that SPRC now achieved $40 million in enterprise value capture year to date, supporting our robust enterprise margin. The refinery maintained very strong utilization rate at 93%, with solid refinery margins of $5.01 per barrel. On the commercial front, domestic sales placement rose to 94%, up from 90% in last year, aligning with our channel optimization strategy so well. Our commercial margin reached at $1.45 per barrel, reflecting continued improvement since the acquisition. This progress has been driven by our focus on channel optimization and cost efficiency, reinforcing the strength of our commercial performance. And next, I would like to hand over to Khun Aswin to share the further performance analysis. Thank you.
Let's start with our market performance. Starting from the refinery gross margin in third quarter, you will see that SPRC's refinery gross margin at $5.4 per barrel has consistently delivered competitive margins over Singapore's gross refinery margin at $4.2 per barrel. This is the result of stronger middle distillate crack, which is being influenced by ongoing supply constraint from European refinery closures, slow ramp up at Dangote, European sanction, lower export from China and South Korea, and intensifying drone attacks on Russia, damaging the energy infrastructure, which drove those middle distillate. While gasoline cracks is slightly declined due to the seasonal demand weakness. Looking at the Dubai price, you will notice that the Dubai price and Melbourne OSP has continued to increase in third quarter. This came from the stronger seasonal demand, ongoing geopolitical tensions on Israel and Iran in early July, which has impacted the Strait of Hormuz supply, and also the concern over the steep U.S. tariff, which may impact the global economic growth. Next slide. So with a stronger margin period, as mentioned, SPRC has increased its domestic supply share of gasoline and diesel up to 19% in third quarter, supported by the optimized production and higher refinery run rate. Despite the seasonal challenges of the lower market demand in this period, our sales to consumer segment through the retail channels or service stations has increased to 4.5% continuously during the past 12 months. This matches with our strategy of spot to street in order to focus and expanding our sales through our current cottage stations, which currently we have 530 cottage stations throughout Thailand. Our sales portion to business and third party was up to 14%. This also backing up to match with our increase in productions. Next slide. So you can see from our total production in third quarter with the favorable margin, we have maximized our refinery utilization to the highest level among the looking backwards 12 months. We have increased to 7.7 million barrels as an output for third quarter. Even though you see that in third quarter we have increased our export portion, but with a favorable margin, this still yields the highest enterprise margin to SPRC. And also the year to date for the domestic sales has continued to increase from 90% to 94% over the past 9 months. As well as the retail market share, we have a continuous success journey from 4.4% when we first integrated with between marketing and refinery business to 4.5 last year, and now year to date we have achieved a market share of 5.7%. And that's about the market and performance. Next, we will look at the financial performance. I will pass to คุณนุชราครับ
Thank you ค่ะคุณอัศวิน Regarding the financial performance of third quarter of this year, that Kun Aswin already mentioned that our enterprise margin, our refinery margin also improved in this quarter comparing to previous period. In terms of the enterprise margin for this quarter is $6.9 a barrel. And that's the combination of the refinery margin and commercial margin, which you can see both margin improve over the in this quarter. For refinery margin, the margin increased because of the improvement in the diesel crack that Kun Aswin also mentioned earlier, and also the supply concerning on Russian production. In terms of the commercial margin, that's the improvement is from the effort from the enterprise that we try to maximize the value creation from the distribution channel. In addition to the improvement in the market margin in third quarter, we also have the stock gain of $1 per barrel. That's the result from the increase in the crude oil price, which resulted from the seasonal demand and ongoing political tension in Israel and Iran. On the 9-month performance, the margin also improved from previous year, and that's to reflect the company effort to maximize and optimize value creation from the business integration. In terms of the enterprise OPEX, that you can see that in third quarter of this year, the OPEX per barrel decreased to 2.6, which lower than previous quarters. And that's the result from the effort in cost-saving initiatives that we try to control the operating expense to ensure that we operate both business efficiently. For the 9 months of this year, we also see the decrease in the operating cost in terms of dollar per barrel from 2.9 in last year to 2.8 in this year. That reflects the effort in terms of the saving initiatives. For the consolidated EBITDA, that we also report higher EBITDA in this quarter. That's from the improvement in the enterprise margin. And in addition to that, in third quarter, there is also the stock gain because of the increase in oil price in this quarter, comparing to the stock loss in previous quarter. And the increase in the EBITDA is also the result of the saving that we have, the saving from the operating expense. In terms of the 9 months EBITDA, we report the number that is slightly below last year. That's just because of the one-time revenue that we recognize for the insurance claim that we received in prior years. For the consolidated net profit for third quarter, net income similar to EBITDA that we report better earnings, and that's result to the net income that significantly improved to $49 million in third quarter and also $45 million in the first 9 months. And if excluding the stock gain loss, which impact from the change in the oil price, in 9 months of this year, we reported adjusted net earning of $73 million. On the next slide, in terms of the financial position, we still maintain a strong working capital with current ratio of around 2. There is a slight decrease in asset and also slight decrease in liability that resulted from the decrease in the oil price that impact to our working capital. And on the liability side, we also reported lower borrowing, and this is from the cash that we can generate it from the operation to support our investment and also being able to pay down the debt. For the net interest bearing to equity, net interest bearing debt to equity ratio, we still have the very strong leverage ratio with the ratio of just only 0.23. On the dividend payment for the first half of this year, we declared the dividend payment of 50 satang or 0.15 baht per share, and we still try to reinforce and emphasize our financial priority that we will give the priority in terms of the steady and reliable dividend to our shareholders. And the next priority, we also focusing on the investment that create the high return to the company, and also paying extra return to shareholders if we have the excess cash and very good performance. And that's the overall summary of the financial performance for this quarter.
Thank you very much, Kun Nutsala. Next, I would like you to bring to the future opportunities. At SPRC, we remain focusing on unlocking future opportunities through two key strategic pillars, which are first, optimizing value chain, which you can see on the left, and the second, profitable growth of marketing business on the right. So I'll go with the first one, the optimizing of the value chain. We are focusing on strengthening our financial discipline, preserving cash, and prioritizing smart investment that maximize total shareholders' value. We also are preparing and ready for the upcoming 2026 turnaround, which will ensure safety and reliable operations. Together with enabling increased processing of lighter crude, we are ensuring project that it will unlock constraints, enabling us to process a higher ratio of light crude. The light crude is our economic crude because of the narrowing light and heavy crude price differential and gain benefits from higher gasoline and jet production. This would enhance sustainable run rate and margin. We also are enhancing cost efficiency and operational performance through advanced feedstock and product optimization, including freight cost reduction, crude flexibility, and blip initiatives, bottom line improvement program. In addition, we continue to explore integration opportunities with the other refinery and petrochemical partners to capture full value chain benefits. Another exciting area is the circular economy, where we aim to capitalize on future demand trends through innovative infrastructure solutions. Next, the profitable growth of the marketing business. We are implementing the spot-to-street strategy to optimize sales channels and maximize fuel netback margins. Building a robust retail ecosystem will accelerate domestic growth while reducing cost to serve through streamlined logistics and supply chain efficiencies. Finally, we are expanding product placement and securing new-term export opportunities in ASEAN, diversifying revenue streams beyond the domestic market. These initiatives position SPRC very well to deliver sustainable growth and resilience in an evolving energy landscape. Now, let's look at the next quarter. The fourth quarter of this year, we will remain three key priorities. The first, we aim to maximize production and driving sales throughput to capture a favorable margin at this moment. The quarter to date, Singapore gross refining margin GRM is very strong, and this momentum positions us so well to take the market opportunities. Second, we are unwavering to ongoing cost efficiency, ensuring we maintain competitiveness in a dynamic environment. Every initiative is aimed at sustaining margins while delivering value. Finally, we are prioritizing pre-turnaround preparations to secure operational readiness for the upcoming turnaround. This proactive approach will help us execute flawlessly and minimize disruptions. Together, these actions form a strategy that strengthens performance today while preparing us so well for tomorrow.